Liquidation cascades are imminent in the short-term future for cryptocurrency traders, and this has already started to begin. Hello everyone, my name is J1 General and welcome back to another cryptocurrency video. If you like this type of content, make sure you hit that like button, make sure you hit that subscribe button, as it always makes help the channel grow. And if you are a cryptocurrency fan and you'd like to shop some cryptocurrency products, I have a crypto shop where you can shop some crypto products and every product is 5% off, so make sure you go do some shopping. Anyways, in today's video guys, we will be speaking about liquidation, the price of Bitcoin in regards to liquidation, because this is what kind of gets a lot of traders into trouble, especially when they trade with high leverage on futures. So with regards to liquidation guys, what does liquidation mean? So with regards to futures trading, if you put in a trade, and you want to long the market, there's two ways. You can either long the market expecting prices to go up, or you can short the market expecting prices to go down. Now you can trade this, but trade it with leverage. What does leverage mean? Leverage means is that you can essentially borrow the amount. So let's say for example you want to leverage Bitcoin long for 10x, at 45k, and for every 1% you actually get 10 times that. So for every 1% you actually, instead of your portfolio going up by 1%, it goes up by 10%, hence the 10x leverage. So if Bitcoin goes up by 10% from 45k, 10% from 45k would be 49.5k. So if Bitcoin went from 45k to 49k and you leveraged long that at 10x, then you would have doubled your money instead of your portfolio going up by 10%. Now it is a tool that a lot of traders use within cryptocurrency because of the volatility within the asset class. We all know, it comes at no surprise that cryptocurrency is, if not the most volatile asset class in the whole wide world. Bitcoin could go up 10%, drop 5%, go up 20%, and then dip 30% from 9 in the morning until lunchtime. That's just the way it is. But as the asset class expands, you can expect that volatility to decrease. Like for example, the stock market or the Nasdaq back in the day, it would have been volatile, but as the market matures, it becomes less risky and it becomes less volatile. But certainly with crypto, especially in today's day and age, it still has that volatility, and traders can actually benefit from that. You have a lot of successful traders that can benefit from this volatility, which is why I'd advise individuals who aren't specifically professional, I don't want to say professional, but good traders, to stay away from leverage, because you can lose your whole portfolio. I've seen many individuals on X tweet their portfolio losing everything. I saw one guy, he lost about 300k from using leverage because he didn't believe the market would go one way. And this is why I also advise people to always look at both sides of the market, always analyze all outcomes regardless of what your bias is and what you think where the market is going to go. But anyways, enough of that. Let's take a look at the liquidation heat map and let's analyze what it suggests. So first of all, this is data from Binance, so it's not all exchanges, but as we all know, Binance is the biggest exchange, but we can take into consideration other exchanges, probably like KuCoin or Bybit, that also allow futures trading. If we take a look at this heat map right now, what does it mean? What is it telling us? I know most of you who are into crypto and you do leverage trading probably know what I'm going to say, but for those new individuals who are new to crypto or who are new to trading itself, you might want to take a listen. You might even want to take a notepad and pen out, but I will leave a link of this website, CoinGlass, in the description down below, because this website is actually very good. There's so many different metrics, so many different charts you can analyze and use to your advantage if you know how to use them. But what does this mean? What does this liquidation heat map mean with regards to the price of Bitcoin? Now, this little colorful section rectangle thing here at the bottom just shows us the amount, yeah, with regards to the color. So if you're leaning towards the yellow side, that means that's where the money is, yeah. If you're leaning towards the purple side, that means there's not a lot of money there. Now with regards to the chart, you can see that we have some spots of purple, blue, green and yellow. So this is actually on a weekly chart. We're going to look at other time frames soon, but on the weekly, what does this mean? So if we take a look right now, Bitcoin's price is currently sitting just under 44k, and you can see there's no colors around this price. Well, that's because this price has literally been covered for the last however many hours or days or so, hence why there's nothing really there. But if we take a look above the market, let's say just above 46k, yeah, you can see that's where the money is. It's yellow. That's where most or majority of the liquidity is. Now, why is that significant? We'll get into that just shortly. But if we take a look at below, you know, you don't really see much. You just see purple color. You might see one green block here just under 42k. But what does this mean? So it means if you have liquidity below the price, it means that if price was to significantly drop to this 42 or just below 42k level, the price would have wiped out the liquidity, meaning those who longed the market, they get wrecked. Yeah, they get liquidated. I shouldn't say wrecked. They get liquidated and lose all their funds. Yeah, which is why traders also advise to put in stop losses, because crypto can move very quickly, and if you don't put in a stop loss and the market drops 20% in 5 minutes, it's the risk that you could lose all your money. Whereas if you have a stop loss, you can potentially prevent that from happening. But yeah, if the price were to drop to this level, it means that those traders who have liquidation levels at this price would get liquidated. Now, if we move to the upside, and let's say price goes above 46k, all of these traders up here who shorted the market, they would get liquidated. Yeah, so really it's just a battle of shorts versus longs. Now, why is it significant? Yeah, why is liquidity significant in the market? Well, market makers, aka whales, institutions, they want as many people to get liquidated as possible, and so do exchanges. Yeah, this is one thing that you guys need to realize, that centralized exchanges aren't your best friends. They want your money. Yeah, they want you to trade on their platforms because they generate fees from spot trading, but when it comes to leverage trading, they're the ones giving you the money. They're the ones borrowing you the money to be able to leverage trade. So by increasing your leverage trade from, let's say, 10x to 50x, you're increasing the risk to be liquidated. If you were to leverage by 10x, it means, let's give the example of 45k again. If you leverage by 10x on 45k, I gave the example, if it went up to 49.5k, you would double your money. However, if the Bitcoin price were to drop by 10%, because it's 10x leverage, and it were to drop to 40.5k, which is 10% less, that's where you would get liquidated. Now, if you were to leverage by 50x, it is a lot riskier. So if price were to go up by 2%, then you'd double your money. However, if price were to drop only by 2% on a 50x leverage, you would get liquidated. And 2% of 45k is 900. So if price were to go to 44k $100, you'd get liquidated if you did not put a stop loss. That's just the way it is. Now, if we actually take a look at the reasonings, again, you can either pause the video and write this down, or you can go into the link. I'll put in a link in the description down below so you can take a look at that. But liquidation heat map, in short, it predicts the price levels at which large-scale liquidation events may occur. How traders can use it. So I touched up on how traders can use leverage trading to essentially leverage their portfolio and use it to their advantage. But how do traders actually use this liquidity heat map? Now, let's actually do some reading. So the liquidation heat map allows traders to identify areas of high liquidity, which can be helpful in various ways, and they've given a couple of ways: magnet zone and support and resistance zone. So magnet zone. Concentration of potential liquidation levels within a specific price range may indicate that price is likely towards that zone. So if there's high liquidity in one place, and for example right here is 46k, the price is likely to move within that zone because exchanges want to liquidate as much people as possible and market makers want to liquidate as much people as possible. Some traders utilize these liquidation levels to gauge the possible direction of price movement and as additional indicators for convergence. Support and resistance zone. This one's probably the most important. In high liquidation areas, larger traders or whales, as I mentioned at the beginning of this video, can execute trades rapidly at favorable prices. Once they enter or exit orders within this liquidity, the price can now reverse. So for example, the whales, will push price from, let's just give the scenario, price pumps from just under 44k all the way to 46k. The whales would pump this price all the way up to 46k to liquidate all of these short traders, and once that liquidity has been reached, then the market can reverse and move back down. Now there's been quite a few liquidations happening throughout this week actually, and we're looking at this on the weekly chart. So if you take a look at this long wick right here, this actually happened a couple of days ago, you can see that the market dropped significantly fast, and you can also see that there was a build up of liquidations in this area before this liquidity got taken. You can see, I think this wick, I remember looking at it and I looked at an exchange, I saw the price of Bitcoin, and then literally 10 minutes later I looked again and price dropped 10% just like that. And that's only Bitcoin, guys. A lot of people trade altcoins, which is even more risky, because the same move where Bitcoin dropped 10%, just Ethereum, and Ethereum is considered a blue chip crypto, Ethereum dropped over 20% of its wick. And that's just Ethereum. If we take a look at other altcoins, they probably even dropped 30% or more. Now on CoinGlass you can actually see all the different exchanges. As I mentioned before, Binance is the biggest exchange, which is why it is the main one. But you got Bybit, OKX, BitGet, Bybit, etc. But yeah, with that being said, guys, if we actually take a look at a higher time frame, so on the weekly time frame we can see that the majority of liquidity lies just above 46k, which is why a lot of people are calling for price to pump, because the liquidity below has been taken, so we should expect to go up to liquidate the shorts. Let's take a look at let's take a look at the 1 month time frame and see where the liquidity lies, or where most of the liquidity lies once this loads. Right, so as we have here, this is a monthly time chart, and you can see that most of the liquidity in these regions have been taken because price pumped significantly at the beginning of the year. Remember, at the beginning of the year, Bitcoin pumped up all the way up until just below that 46k level, and then a couple of days later it went all the way back down to just over 40k. So most of the liquidity in this region has been taken, but you can see that some positions are being built up again, hence why you can see some colorful lines in between. So most of the liquidity has been taken on a 1 month time frame. If we take a look at the 3 month, let's say, and let's wait while this loads again. Right, yeah, so here you have most of the liquidity is lying just under 35k, and you can see the amount, and this is why I wanted to look at the higher time frames, because you can exactly see how much liquidations are built up in that position and why exchanges / institutions and / whales want that liquidity. You can see at the bottom, the yellow line means 3.8 billion with a B, not million with an M, billion with a B. So if price were to drop towards that 34k level, which I assume this is where all the liquidity is, you can just play around with the dates and the price level itself, but you can see most of the liquidation levels are around this price. And we can see, so from, if we go to, around 44.5k, you can see liquidation leverage is 1.17 billion. If we go just under that to 34.2k, 500 million. If we go just under that, 34.1 is 268. If you go to 33.9k, 2.85 billion in liquidations lay there. And you might get traders that think, oh, we're never touching that level again, we're never going there. Just remember, this is cryptocurrency. Yeah, cryptocurrency can drop 50% just like that in a day if it wanted to. Just take the pandemic, for example. Just take even bull markets. In bull markets, we get 30 to 40% corrections every so often. It's normal. In the last cycle, I remember it was May 2021 where Bitcoin price dropped 50% across 2 weeks. 50%! That's crazy. It went from 64k, I think, back down to 34k in just 2 weeks in the middle of a bull market. So those who are at 60 something k, they probably thought, yeah, price ain't going back to 34k. 2 weeks later, boom, everyone liquidated. And that's what exchanges want. If we actually take a look, I'm intrigued to see what the liquidation looks like on a yearly time frame. I haven't looked at this indicator in a couple of days, so it's quite interesting to see how much it updates regularly because of how fast cryptocurrency moves. Now on a yearly scale, yeah, it's great. You can see that there's not really much liquidity above that 46k level. Yeah, and that's because price has run up significantly from 16.5k all the way up to 46k. So I don't think there is much more of a measured move in the short term. We discussed that 48 to 50k level as a potential zone for resistance, which is confluent with that 0618 Fibonacci, and I discussed how two different narratives could get us there. Either the spot ETF, which the window for approval has opened today because today is the 5th of January, but it will most likely get approved between the 8th and the 10th of January. So either that narrative or the Bitcoin halving narrative will be the one to spark that 618 elusive level before we go into a major correction territory. But on a yearly time frame, you can see that a lot of liquidity lies at that 34k level, which we just looked at, and also a lot of liquidity lies around that 25k level. Now, I'm not saying we can hit those levels. I'm not saying that we will go there. But this chart just shows where the majority of the liquidity lies. So it should just be a caution in the back of your head saying, okay, if we get a large dip, what are some of the key levels we can watch before we start to see a potential reversal? So, for example, if we get a crazy correction back down to 34k, you'll be like, okay, that was a crazy move, 30% move, but we should expect a rebound from this level because all of the liquidity has been taken at that level. So you could expect some sort of bounce back. But then if the bounce back is a higher higher low, and then we go into a more corrective structure, and then bad news, and then FUD strikes, and then the economy collapses like some sort of, pandemic part 2, and we drop all the way down to 25k, you knew why all along. You knew why it happened all along because a lot of liquidity was built up there. So you can use this in a short-term time frame, and you can use this in a long-term time frame to map out some support and resistance zones, which is why I think this metric is actually very good. I mentioned in a couple of my videos before that I will look at this indicator in more detail because I think it is worth it. I think it's good that a lot of traders or any investors within cryptocurrency should use because it is worth it. It's a great metric. But yeah, guys, that comes to the end of the video. I hope you all enjoyed it. Again, I'll put a link of this website in the description down below. So take your time, look at all the metrics, look at all the charts within this website. Take a read of this, take it in properly so you can understand it. And once you understand it, you'll become a better investor and trader. So that's it from me today, guys. I hope you all enjoyed the video. If you did, make sure you hit that like button. Make sure you hit that subscribe button, as it always makes help the channel grow. And as always, it's been your boy, J1 General. Thank you.